Alright, let's start with the theoretical part of the system, so that all the concepts I need you to understand are clear, and then we can apply the system to the market. Since it's not a completely mechanical system, no system should be 100% mechanical in reality.
Every system should be able to adapt to certain market conditions.
It also that with the information we have, we can filter out bad trades, not just take something because we see a pattern and that's it. So, before we get to that point, I need you to clearly understand all the theory. So let's start with this first class or session, which will be the structure, the foundation of everything, of every market, not just this system as such. Every market moves in a structured manner. No market goes in a straight line in one direction,
without a single pullback, because that means that this market doesn't have a counterpart.
And where it wouldn't be a liquid market, nor efficient. So for every market, we need to see this, regardless of the trend. There will be movements in one direction and pullbacks executing orders on both sides of the market. The counterpart is being seen. It's a liquid market, an efficient market. So we cannot avoid it in any system we operate. As I mentioned in the introduction, I'm not here to be an author of anything. I'm not here to fight or argue. And what's it called? I'm here. What's it called? I'm here. I'll explain how I use it and how it's used in DTT effects. And that's it. I also don't know where he got things from. There are many people who say that Dave got this from, I don't know, from Bad Citizens, Nah, from Phantom, from Impact, a bunch of channels that had already uploaded it, and there's no need to fight. I mean, the idea is to find a way to explain market movements. And if we have some concepts that explain market movements, then let this help us operate and make money. And ignore all the noise you see on social media. Don't waste energy, time, or focus arguing about something that isn't making you money. The market will continue moving in the same way. So, before going into the structure, I'm going to clarify a few concepts right away. For those people who are completely new to trading and suddenly find themselves watching this video, it might not be the most ideal since I'm not going to go too deep into the basics. There is very good information out there with free courses, basic things, how to use the platforms, what a candle is. I'm not going to explain those kinds of things. Even in the structure, I'm not going to go too deep into the basics either. In the exaggeration, there is an abundance of information, as I tell you, out there, and, well, it's not my goal. All that is already out there. I want to come and explain the market the way I've been seeing it, using these concepts, and what has come closest to me for the accuracy of a day-to-day market. So well, and for those who are already in the system as such, who have seen certain concepts, certain now, of certain terminologies in networks, I will clarify some things once and for all, so that we have it clear. So on this side, you will hear me saying, this is just simply, also, area, zone for this or that. But for this or that, we'll leave it here. I'll tell you why. A structure, a structural zone. Any of these things I mentioned, when you see someone mentioning it to other people,
It's exactly the same. I want to make this clear because sometimes people are told area, area, area. They learn it as area, and then they are told it's in the SD. So they go and say, but wasn't it an area? Why is it now an SD? So they should know that all of this refers to the same thing. I'm setting fractal aside a bit because fractal, we'll be seeing one of these things just in a different time frame. So a fractal will be something like, I don't know, if we grab a quick fractal, the most typical one, this one here, these wicks, those are fractals. This wick goes down, then goes up, then opens here. The rise and fall is a fractal, because it's a fractal, because I see it in 15 minutes as wicks, but in 1 minute, it's some kind of structure zone. See? So here, we have a low, a high, a new low. So it's a structure in another time frame. Only seeing it fractally, I'm interpreting it through the opening, the closings of the candles, the wicks. So it's still the same. It's still an area, a zone, a structure, etc., but in a different time frame. And on this side, when you hear this, read this, it's when the style candle structure, candle pattern for the flip. Whenever you see this candle structure, candle pattern, the flip, all this is going to mean the same thing too. So on one side, we have the areas, the zones, and on the other side, we have the candle pattern. And the candle pattern will be a way to identify a structure change in a lower time frame using fractals. So for example, we have here, well, we are on 15 minutes. We have here this that is here. This here, because of candles. Well, some people might see it as a range, if we omit this wick. For many, this here won't make much sense, nor this here, nor this that is here, but that's the flip. That's the candlestick pattern, the one that's talked about so much in this system. And it means we see this, that in a lower time frame the market did that. Well, down here we're going to grab it once for this. The market did this, it went down, it went up here, it closed this candle, opened the next one, went up here, went all the way down, and went up here. So we could see that as the change of structure in a lower time frame. Then there, if it says this way, or the Chochin, that we use some different rules, then we'll see, well, the way to use it. Night City is very, very exposed to becoming a trap. So with the concepts we use, there are many ways to avoid those traps. So that will be that candle pattern, that candlestick structure will be simply see through the wicks of the candles when that change in structure happens. Then yes, we go and look at a lower time frame where we have the price coming down here. And if this low, there became this high, there became this low, and it went, and we had just that. The price made a low here, that then this one here, which made this low here, and then closed here. So the same here, it was doing this. And see that it matches exactly. I mean, it wasn't perfect because when you go down a time frame, it shifts, but you can see what the price is doing on the lower time frame. So when you hear about the Bella's candles extractor flip pattern, this is it. Just look in the higher time frame. Through wicks and bodies and candles, whether it's a bearish candle, a bullish candle, etc. What happens in the lower time frame? Well, so to clear that up once and for all, so there's no confusion later on like that, let's move to the structure part. So, as we said, the market will never move in a straight line. How we are going to use the structure? If the market making higher highs yesterday to AX, higher highs, higher lows in a bullish structure, right? What do we want to validate these things? We are going to have two main rules. One, that there is a valid pullback. A valid pullback. In an uptrend here, we need a valid pullback there so that when the price takes out this high, it validates our protected LOB in that uptrend. If there's no valid pullback here and the price makes a small retracement and continues, then all that would be a single bullish move, and we still wouldn't have a valid low, only the last one that would have been generated around here. So that's why we need to know how to validate pullbacks. That's one thing. And the other is bodies with close. At the moment, when we want to validate a continuation, we'll have to close with a body above that validated hive. For sure. If the price comes and takes it out and comes with a wick, it closes with the wick, then we don't validate that continuation yet. And that will have a function later that we will see in another video. So it reaches the price. It is making an impulse. It makes me a valid pullback, which I will tell you later how to validate a retracement. And then it closes, making another impulse. It closes with a body above that high. So we already have the continuation, and this becomes our new protected load. Now a valid pullback is made here, and we close with a body here. So we have a new high and our protected low. The idea is that we always keep track of those protected lows and hikes. I will later mention these swing points. When you hear me talking about swing points, I will be talking about that, about hikes and lows. Just because I call them swing does not mean it is something of a higher time frame, of a very high time frame. No, simply the swing points are these, the hikes, the doves. Well, then we are going to keep track of the swings as we advance in a structure so that we do not get lost in whatever the price starts to do here in the low time frame, because many people begin to get blind to what is happening here, and the price has never left either its high or its last valid low. So the price is actually in a range. They start to make trades by trying to guess a direction without having yet waited for confirmation to come out of the current structure. So it's good. track their swings so they don't get lost in internal structures. As long as those swings remain intact, it means that there has been neither a continuation nor a change in structure. Now, when does the change in structure occur? When a higher high is made and the body breaks again, closing with the body the last low that had been validated. If there was a continuation here, the lowest point between the previous high and the new high was valid for us. Any other low in between doesn't matter to me. What matters is the lowest point between those two highs. Okay, that is going to be your protected low. So, the moment we close below, the market structure has changed, and now we are going to make lower lows. Lower lows and lower highs. All right. Because they are being removed.
Lower highs and lower lows then.
From this moment on, it is in expectation when it comes to just structure. And in order flow, we will see in the order flow class, which is the most complicated. We will see why sometimes the market does this, why it does this. That seems like a change of structure in both directions, a false change of structure. We will see that later. But this is the basis of it all. This structure through closes with bodies and valid pullbacks. Now, how do I then validate a pullback? Let's go to the real chart to see this more clearly. The way I am going to validate a pullback is based on the time frame I am in. The price has been giving me a downward momentum, and that last candle in favor of that trend. If I am in a downtrend, if I observe, I am only here. That last bearish candle that was created and made the low, we will need it to close with a body above its high. If that never happens, I still don't have a pullback until I get that close with a full body. Well, I already have the close with full body. So for me, it's a valid pullback. So what happens from this moment, if I already have a valid pullback, that at the moment I break this low, since what confirms it for me is the logo, because it's a pullback, okay, I can consider that I got a continuation. Now, if I break this high, for example, it wouldn't be a change in this trend. Because if the price was doing this downward impulse, and here it changed structure downward, look how here we closed with the body above this, and then we closed with the body below this candle, and for the protected low, which was the last bullish candle, this one here, and we closed with the body below, so that confirmed this as a pullback. Therefore, here we have the change of structure. But if you look here, this was the last bullish candle, and see how we couldn't close with the body above it. So this is what can also create false structure changes and confuse people about why the price breaks a high for them, but doesn't change the market direction. So, if the price takes out this high, I still don't change the structure, because the one that has to be taken out is this one. So, at this point, what do I have? I have my last peak protected in a downtrend, and my low validated by this pullback. So, if I'm in a downtrend, this is the protected point, the strong point, and this is the weak point, the weak low, because I assume the trend will continue down, right? So we wait for one of these two things to happen. Either it becomes the area of structure change, or it breaks for a structure change. So here is the area of structure change. Later on in the zone selection class, I'll show you how to select the zones. And that's where you get to that area. So if we start delivering from that area, what would one expect with the load of that temporality? That all this has been well received. And more if it isn't a pullback voucher, it doesn't matter. Look how we closed it with the body above this even. But the market fell again there. This is not part of the structure of this time frame. It's simply a fractal, a zone. So this is the way to validate pullbacks well. So there they saw the example of the bearish close above that last bearish candle, and the bullish close would be like this. If this is the last bullish candle that was made in this bullish impulse, I will wait for a body close below it. There wasn't. That's it. That's a valid pullback. Now, I wait for the break of this high to continue, or the break of this low with the body to change the trend. So the break of the low with the body happened. Then that's it. The trend changed to bearish. That's how we're going to validate the pullbacks. Alright. Dave teaches something I don't really trade much with, and that's swing counting. So I'll explain it anyway for people who want everything exactly as Dave teaches it. What do you mean by swing counting? In an uptrend, the price is making hikes, right? Let's do it with this. 1 hike, 2 hikes, 3 hikes, 4 hikes, 5 hikes, 6 hikes. He says that between the 4th and 6th swing, a reversal would be expected. That is, it can already be expected that the market will turn back. In a smaller time frame, if this is a higher time frame, all this movement, then I would expect the market to turn back, and it could be to an optimal point of that higher time frame to just make the continuation. But he has that theory of swing counting. It is necessary that they are continuous swings, and not that the price comes and makes you 3 swings and then changes structure. And over here you start counting again. Like this. You're counting here. 1. You're counting here. 2. You're counting here. 3. 2. And the price goes away. And only when it starts to rise again, they start counting. I don't know. Around here. 45. No. This should not be continuous. Swings at the moment. One of the protected ones breaks the count. Resets. I this rather. How do I use it? I use it in such a way that if I take it to one of the areas of supply and demand that we are going to be using, and just the market has been doing this, I only take it as a liquidity target that is being constructed. And the moment I get to that area, it will be the point where the pattern will form to then give the reversal. I complement it more that way. I'm not as mechanical as to say, okay, I counted 6 swings. I'm going short. But it's something that helps many people to have an idea of when the market is going to be. There will be a reversal. In fact, throughout this rise, it already happened.
I check myself. A swing here. Another swing here.
Here there is no valid pullback. Look at this beautiful huge spike.
This was from some earnings, if I'm not mistaken, from Nvidia, I think. So this doesn't count as a valid one. So then all this is a single leg of displacement, up to where? Up to here. This could be the high, because a valid pullback. But here we had wicks. So when now it's a valid pullback, I take the highest point there. Yes, the bodies matter, not the high, which was going to be the valid pullback. No, at the moment, that if I make a valid pullback, I have closes with body around here and all that, I will take the highest point. Then,
here is the third one. This was our protected low, because it's the lowest point between the previous high, and then there. So look, the price took this out.
But this wasn't a valid pullback. So this isn't a trend change in this time frame. Maybe it was in a smaller time frame. Yes, but not in this time frame. So here is our other high. Just here. Look here again. There was no valid pullback. We have the low of this candle, and it was not closed.
So only until around here, until this loop is made. Because look, there wasn't a valid pullback here either. This is the bullish candle, and we never closed below it. So look how all of this is a single leg of movement, until we finally close below this bullish candle here. So we take that high, and that's the fourth one.
Over here we close. It closed well over here. Here's the fifth, until we close with body. And here's the revision.
Over here was the sixth.
Over here was the sixth. And it closed up here. And there it gave a reversal on a lower time frame around here. A reversal on a lower time frame. Look how it ended up making more swings around here. Around the 7th or 8th. It really ended up being the reverse. But in 4 hours. And yes, the entire rule was fulfilled. 1, 2, 3, 4, 5. There are a couple that don't count, but that's the theory. Counting the swings. And when you're between the 4th and the 6th, expect a reversal. We have to be expecting a reversal. Here was this high. All these were wicks. Finally the high came to be in this area. It's quite tricky. Well, so there you saw a bit about the valid pullbacks and everything, and this is what is called swing counting. So when you see people from EDFX who want to follow and say things like I'm in the 6th swing and so on, when you hear people saying that, they are simply referring to the fact that they are counting the swings. They want to wait for a reversal. I don't trade like that, as I told you. I'm not so mechanical about it. I take into account the context of where we are making a delivery. If we are already in an area, in this case, we are at all-time highs, then it's complex to define an area as such. But that's the theory for you all. Okay, and now for me, what is the other important point of structure? So, we have these two rules. The valid MAC as a valid pullback and the strong closing. These are our rules to keep working on the structure. Now what we need to keep in mind is the multi-temporality. Here I go with multi-temporality. I don't want to assume that if green is the temporality of an hour and red is 5 minutes,
I don't want to assume that just because a structural change happened here in 5 minutes, I'm immediately going to go for this low. The structure on the 1-hour chart is still bullish until this low is properly respected.
Now, if all of this happens from a daily, weekly, or 4-hour area, an area of higher time frame and therefore higher hierarchy,
I can have that expectation that now it is indeed forming, but I would like the extra confirmation of 1 hour and likewise a 1-hour pullback. I don't want to rush to catch the best reversals. It's really something that is not necessary with this system. You don't always have to guess where the market will fully reverse. The idea is to go with the trend. The price will prove you right more often by going with the trend than when you finally get the reversal, which will be one reversal against possibly 5, 6, 7 impulses in favor of the trend. So be aware of what time frame you are working with and where the highs and lows of the higher time frames are. Generally, these trend changes in a lower time frame are to make a pullback to the optimal point of the higher time frame. In this case, a 1-hour green. And let's continue again. So, it will be a trend change once more in the lower time frame, and now the trends align again. So, I want you to always be very aware of this multi-time frame concept. Don't rely so much on the lower time frame so that the market doesn't surprise you. Keep in mind where the optimal points of their highest temporality will be, and don't want to come directly short, chasing the price eternally. Well, let's look at another example over here that I quite like.
Set up for me. 4 hours. This was
So around here we have an uptrend, right? We have the last bullish candle that set the high. The price starts to consolidate or pull back. What do I expect? A close with a body below it to validate this as a pullback. It did it, validated it, so now what do I have? I have a new high.
so that at the moment it breaks, we confirm the continuation.
And our wolf, the last wolf, which will be, I don't know, down here, won't be over there. Let's pretend it's this one, so we don't get too lost over there then. That's what I'm waiting for a continuation, the break of that high that just validated the price for me with this pullback. Either the break of my last one validates it to confirm the change in structure. Does it break my high? Perfect. The price starts to turn around here. What do I need to validate this pullback in this time frame? A close below this. Did we get it? No, we didn't get it. So, what does all this continue to be? A single leg of bullish displacement. Therefore, this is not a low with which I'm going to want to validate a change in trend. If the price had turned around here and closed below this low, that doesn't mean it's a change in trend, because it wasn't a pullback value above. The price starts to turn around again. So what do I want? A close below the last bullish candle. Did we get it? Perfect. Now I have this for continuation, and my last valid low for a change in trend. My last valid low. It disrupts the perfect high, but we didn't get a close with body.
Therefore, if we don't close with body above this, like we did here, where this low mattered to us, we can't validate this low in this time frame. And that means that the fact that we close later with body under this hasn't shown a change in trend in this time frame yet, because neither this high was broken with body, and hence this low has been validated. So everything continues to be a single upward displacement law thus far. Now, which is our only low that would validate a change in trend? This one, and the price comes back precisely to this whole last area, reaching its 50% equilibrium point, and resumes the 4-hour upward trend. Now in a smaller time frame, evidently it was a trend change, and you can see it this way. Here a trend change in a smaller time frame. The price reached to that, and that gave a lower time frame pullback to the previous area that was already being built, so that it could continue with the higher time frame trend. If at this point you were still considering selling, then you need to work more on the concept of multi-time frame analysis. And not just 1 hour. So if we get more valid pullbacks along the way, if the trend change happens here as I was saying, but we reach the 4-hour zone, then when I'm there, I want to switch my mindset back to the 4-hour trend. So that's the topic of multi-temporality. Then when we're operating in lower time frames, the system scalping, which is what this system is aiming for and is focused on. It can be operated in any time frame, in fact, but the maximum possible benefit is achieved in scalping. When we're in scalping, what I want is that being in 1 minute, you don't change your minute trend just because in 5 seconds it made a trend change for you. It made a trend change for you. It's also kind of like what we're seeing over there with the 4 hours in 15 minutes, 1 hour if the trend changes, but 4 hours more. So that's all we're going to see for now regarding the structure part. The points I want you to be clear about: valid pullbacks, the body closures, how we are going to use them, and the topic of multi-temporality. Very important. The higher the time frame, the higher the hierarchy of the zone's reaction. Thus, an equivalent reaction to that time frame of the zone we are working on is expected if the price reaches a daily area, weekly, etc. You will get a reaction equivalent to that, and it will take an equivalent amount of time as well. Don't try to anticipate that the price has arrived, touched, and immediately you are going to place an entry just because the price will probably take good hours or even days to develop that weekly movement again. So it's important to digest this now to save yourself frustrations and despair later. So I'm going to end the class here, and in the next sessions we'll see how to select those areas, understand the functions of rejections, all of that, and we'll see you then.